Right. Good afternoon, everyone. Thank you for being here and coming to this very interesting panel, which if you see, I was supposed to be in the middle, but now I'm on the side. This is how agile this industry is, and we keep moving. All right, just a bit about me. I am the head of legal and regulatory for the Middle East Stablecoin Association. That's a not-for-profit association we've set up, mainly to bring about the awareness and build up the ecosystem. As you know, Middle East globally has been leading this space of stablecoin. I also, as in my day job, am a lawyer and I run my law firm by the name of Karm Legal that has been working in this space of emerging tech, specifically virtual assets, payments, digital funds for almost 8 years here in UAE. Quite excited to be on the panel here, and I'm going to start with each one of them introducing themselves before we come down to discussing what are they doing here in stablecoin. Over to you.
Thank you, Kokila. My name is Premdeep. I'm from Deutsche Bank DIFC. I represent Deutsche Bank's corporate banking division, and within that, I run what we call as the fintech platforms and digital economy client segment for the MEA region. As the name suggests, this is a division that specifically takes care of companies in the digital space, fintechs, VASPs, e-commerce, and we are pretty active, with these clients in various parts of the world. Some of it, of course, is public information, so you can look that up. But very excited to be here to share and learn. Of course, this is a space which is so fast evolving. Frankly, for bankers, it's very tough to keep pace because we are not technology people. We are bankers, but now bankers have to learn this. So very excited to be here and share and learn.
Over to you, Jonathan.
Hello, Tess. I'm Jonathan Loh, the CEO and founder of BibTap. So basically, I've spent many years in the past providing crypto card white labels for companies. And right now, we see banking as a problem. So we have built the world's first omnibank, basically a combination of traditional bank, neobank, crypto exchange, crypto cards, and payments, everything in one, providing a banking as a service, banking orchestration, and we call it Airbnb for banking.
Hi, Rahul Kumar, so head of digital assets, MENA at Capital.com. So Capital.com, you may have seen our booth earlier today. So we're a CFD broker by design. So I'm responsible for leading the digital asset strategy. At the moment, you can trade crypto CFDs on our platform, but we're working on some new initiatives.
My name is Khalil Alami, and I'm the founder and CEO of Teller, an online payments acquirer licensed here in the UAE and operates throughout the GCC market. We're a little bit on the side of this conversation. We process usually traditional payments such as credit cards, open banking and open finance. Happy to be here to see how we can add value to this conversation.
Amazing. So you do see that we have a diverse panel here. We've got a bank, we've got a VASP, we've got a trading company, and we've got a merchant acquirer. So one question that comes to mind is that how do they see stablecoins? What is their role in this? Interestingly, as a lawyer in this space, we're very confident to say stablecoins have become the foundation layer for the digital infrastructure that we're building on. Started as just with bringing in stability, taking away a little volatility that was there in our virtual assets market, adding that stability, used for payments, settlements, transfers, all in this space. Interestingly, yesterday I've done a session hold on what will be a universal definition for stablecoin. We'll not come to the legal part, but then from each one of you, if you could add that, what do you understand a stablecoin to be, and what the main important role it plays in your industry?
Thanks. So from our perspective, stablecoin could be a new form of money, settlement layer, or it could be, rail to transfer funds. And like anything new that is happening, from our perspective, of course, adoption is a journey, and it is moving at a particular pace. We see institutional adoption obviously picking up, but honestly, it's still a little far away from being called mainstream. especially for stable coins as a payment rail. It is picking up, but it is still a little far away from being what we would call as mainstream. Then comes the regulatory bit, and given the pace at which this industry is evolving, I think regulation certainly is catching up. A lot of the stuff that is happening is not really tested. So, for example, if there is large proliferation of stable coins, on a macroeconomic side, how would that impact money supply? How would that impact banks' ability to create credit? These are questions that have not been answered. As bankers, we look at those questions. Also, what happens if the peg is broken? Everyone, obviously there is underlying trust that a stable coin is pegged to the value of fiat. But what if that is broken? It's not happened yet, but it can happen. So, these are some of the questions that we as banks, always think about. And I think the operators that are here, or, the firms that are trying to proliferate this, of course, they are looking for much higher levels of adoption. And, I think adoption is coming. But from a bank's point of view, there are some very high-level macro questions that we need to understand and kind of, mitigate from our perspective.
Yeah. Depegging and dollarization are one of the biggest risks that we talk about whenever we've talked about stablecoins. And rightfully, the banks would be thinking, and also the deposit-taking function which a stablecoin picks up, they pretty much behave and resemble like a bank. Over to you, Jonathan.
So I mean, we're in IFX, right? It's because I'm a crypto guy. So I don't want to bore everyone with the crypto terms of what stablecoins is. But in short, right, from our understanding, all currencies in the world right now, you need a settlement currency, right? Right now, everyone knows USD as the settlement currency for fiat. Fiat is cash, right? But for cryptocurrencies and digital currencies, like we call it, right, the settlement layers is stablecoins. So it's like either USDT, Tether, or USDC, Circle. Basically, it's a dollar-pegged token based on, for the cryptocurrencies. So for us, right, basically what we use stablecoins for, we use it as a settlement layer because, like, for example, we built omni-banking structure for banks, connecting banks from different parts of the world and different payment solutions. You need a single settlement token to be able to be settled across borders instantly. So this is where stablecoins comes in. And a lot of you guys may not know, stablecoin volume has already exceeded Visa and MasterCard by a lot. It's crazy. And a lot of people still assume stablecoins as crypto and crypto as a scam. So it's so weird because the world is moving towards this inevitably. So it's more of everyone trying to understand what stablecoin is and then adopting it, because once government starts pushing it, there is trust. And once there's trust, there's no volatility. So I think that's what I see in stablecoins.
They bring in the stability. There is the similarity between a virtual asset and stablecoin remain in the store of value, unit of account, medium of exchange, transferability. But then they deviate, and they deviate completely from the use case and also their general character, how it's built up. Rahul, from you.
So I'm going to approach it twofold. So one, from the eyes of a retail trader. So I guess, retail trader, for example, a Capital.com client, or whoever here, probably sees stablecoin, i.e. USDC or USDT, as a form of digital cash. So one of the use cases where we're seeing amongst the industry is that certain traders want to actually fund their account using USDT, USDC. So it's a funding mechanism for their investments. And then I guess, secondly, from an institutional perspective, as has been touched before here, it's a form of settlement. So that's the way that we're seeing it.
As a technology innovators in payments, for us, Stellar, as a payments acquirer in the digital world, probably IFX would be the only place that I would say we're more traditional than anywhere else. So for us, stablecoins is no longer a crypto experiment. It's more of a financial infrastructure settlement layer or operational layer of a currency. But looking at it as a digitally wrapped main currency, like the AED coin, for example, or the AE coin. We look at it as just like the regular dirham, but it's digitally wrapped. because it's backed by one-to-one. Similar, like I think in the U.S. where it is mandatory to be backed one-to-one. We talked about the trust issue. For us as mainstream payments processors, I think we're in the phase where we understand what it is, but since the adoption is still quite low, at least I know the numbers speak volumes over Visa, MasterCard, but I don't think it's still from an adoption perspective there for retail payments and what have you. So we're just taking a step back, looking at it, and being ready to process it.
I think just to add in here that interestingly, all four of you looked at one aspect of the definition, and which is brilliant, that you talked about these are all fiat-backed. Normally the discussion comes in, people also take asset-backed tokens to be stablecoins, because a stablecoin could be backed by another basket of cryptos, another basket of FX, and a basket of commodities like gold, copper, and this is the use cases we are also seeing globally. And we do spend a lot of time in understanding what will you define as a stablecoin there. Interestingly, what UAE's approach has been more on payments, like most of the regulators, unlike a MESA that's looked at both e-money token as well as a ARD as an asset reference token. So just when we're talking about it operationally as a settlement layer, as a digital infrastructure, and we're seeing this across, because it's the whole programmability of a stablecoin or money sitting in my pocket just takes us to the next level. So what do you think the banks need to do in this experiment? What role do you play other than being a custodian? And that's one of the questions I would like to know even as a lawyer in this space, that how open are the banks?
Actually, that's a very sensitive question, and about how open are the banks, and what banks do is always a function of regulatory comfort. Because banks are one of the most highly regulated industries. I think from a bank at the moment, stablecoin, largely looks like it's a mechanism for a settlement layer, or mostly for cross-border. And of course, it has utilities as was suggested. It's better as a collateral mechanism. Of course, they are traded also. Some of the ones that you mentioned, like gold-backed or algorithmic. I mean, honestly, some of those stories are kind of done. Now probably the ones that are mainstream are the ones which are fiat or at least treasury-backed. So those are the ones that are apparently the more serious ones, which will have more use cases and more proliferation. But I think, from the bank's point of view, the utility of stablecoin will eventually be for cross-border. That is what we feel. And, most countries or many large economies have their own very efficient domestic rails. So whether, a stable coin is used for local transactions or not is a matter of discovery. But when it comes to international payments, we believe stable coins will certainly have or could be a game changer, and that is what we are observing right now.
Interesting. From a WASP and the term that you use, like a omnibus for all these payments, my question to you is going to be, do you see at what point do you see the tipping point between stablecoin behaving like an investment or a digital security token? When these settlements and when the investments start coming in, like when there is a yield that comes on a stablecoin, do you see that as a...
Well, I see it 100% happening, but the problem is it's almost impossible for banks, at least for the next few years, to accept. Because the regulation, like my friend over here mentioned, it's so tough. Like even now, Singapore and Dubai and Hong Kong, they are the leading financial hubs in the world, right? And they all accept crypto, but the banks do not accept crypto. That's the thing. Like even in Dubai, Ras Al Khaimah, they issue licenses for crypto companies, but they cannot open bank accounts once they know that they are crypto related. So that is the thing. It is almost impossible. That's why I believe banking orchestration is going to be the key for banks to finally accept funds that come from crypto. They cannot probably accept crypto yet, at least not so soon, but at least they can now accept funds that come from crypto for investment purposes, and then probably pay out dividends fiat then converted into crypto. You get what I mean? They cannot, I believe, because of regulations, generate yield from crypto earnings because it's securities, but then they can pay out in crypto. This is what I see.
On a trading platform, do you get requests from your clients asking for yield-bearing stablecoins investments or trading in not just virtual assets, but in particular in stablecoins?
So look, for us at the moment at Capital.com, we don't currently offer those type of products. So we're purely a CFD shop, so you can buy a crypto CFD. There are a number of other VASPs out there who are offering these yield-generating products. I think the whole point, though, is around client education, building trust in the ecosystem. So it's, for example, what's going to convince a retail customer to take out their 6% from WEO and put it in the VASP, which could potentially earn them 10 or 11%, but is it safe? Is it protected by a bank guarantee? So I think that there's a lot more education to be done around in the area. I think also, look, what we're discussing in this juncture is, what more can the banks do to sort of accelerate adoption, I guess. And I think, once you see banks offering these type of products, then there will be, a lot more client demand. I think in order on how to get the banks there, it's a journey, right? So, we've had legacy banking systems the last 20, 30 years. I think now you are seeing the banks, especially here in the UAE, being at the forefront of digital assets. There's a real push on banks to, I guess, baby steppers, client money accounts. Now you're seeing, every major bank about to or have a crypto brokerage offering. So you are getting there. I think it's just about a journey as well, right? You need to upskill the right talent within the organization. Some of the key risks with banking today, when you're looking at digital assets, are actually cybersecurity. Back in the day, cybersecurity wasn't really a thing, right? When you're handling cash. So I think those are some of the themes that would definitely help to change and increase adoption.
The themes and risks have multiplied. Yes.
I think for us, on the retail payment side, I think it remains that it's not about crypto, it's more about stablecoin. Government-backed, maybe easier to do AML, KYC, all that stuff, and that's really where we draw the line as a regulated entity. So it's still a little bit unknown to us to see how we can do that, but definitely stablecoin that is backed by a government for us is a much easier adoption than just a random crypto coin.
Government backed would essentially then further take a form of a CBDC. So this is where, from every use case and every element that we add to our basic virtual asset, we keep redefining how they would be perceived and, used in the market.
True. Very true.
Interestingly, we're sitting here in United Arab Emirates where we've got regulators right from our central bank coming out with payment token service regulations last year, by which we saw influx of AED coins. We have our USD-backed coins. And there's a whole process that both Central Bank of UAE and ADGM's FSRA has come out for issuance. So one of the intermediaries has been taken care of, and that's the issuance and custodians. So what sort of dynamics do you see it in the market or from your customers? AED stablecoin versus a USD stablecoin?
I mean, the volumes speak for itself. I mean, currently, of course, the highest proliferation is USDC. USD stable coins. This part of the world has come up with, with an AED stable coin. And as I said earlier, UAE has probably, the effort is to kind of build an entire ecosystem around a domestic stable coin. There are government payments being accepted. The AED stablecoin actually could be a right way to even internationalize the dirham. So, given that it is a US dollar peg, we are seeing this, that there are Asian currencies against which the dirham is actually, the AED stablecoin is now actually, there are rails to trade those. So, AED is a different case where we are seeing traction in terms of an entire ecosystem being developed with a lot of government backing and maybe a move towards internationalization of the dirham. But for any other stable coin, any local stable coins, again, as I said, the use case seems to be quite limited, honestly. If you consider a country like, let's say, India, they've worked towards a CBDC kind of, and an e-rupee, but frankly, there is no stable coin. The government there might really not encourage a lot of USD stable coin businesses because it leads to a lot of dollarization of the economy. We've seen arguments that, countries like Brazil and all people hold USD stable coins because they don't want to hold their own currency. It's only a matter of time when central banks gear up and say this is not going to be allowed. Thailand, for that matter, has actually cracked down on this because if you're not allowed to hold US dollars, you should not be allowed to hold US dollar stable coins. So, AED is a good example of a domestic stable coin, but it may not be replicated in many other geographies or currencies. That's our understanding.
I think every monetary authority would like to control what plays in their payment ecosystem. So we will see what we say nationalized or domestic stablecoins coming in this space. Yes.
I believe it's actually not going to be so easy for AED to take over USDC and USDT because why? Just look at the last 12 months, I believe there's a ton of UAE stablecoins, right? There's probably 4 or 5. 4. So local stablecoin itself is already so fragmented, right? So how do you get more adoption and visibility on one specific token and more trust, right? So even for example, because I'm from Singapore, we have one stablecoin, SGX, right? One government-backed stablecoin. And even though nobody around the world who uses SGX at all, unless they want to off-ramp into cash, SG Cash, into a Singapore bank account. So I believe it requires a lot of regulation and government backing and also unity within the country to actually everyone come together to actually say, okay, let's all recognize this one stablecoin and then push the use case globally together as a country. All the companies getting together, the government backing it publicly and allowing everyone, it's just like US, right? How US is getting so much global traction is because the president himself is flying the flag and pushing everything, right? I don't want to mention too much because it might be sensitive, okay? But this is what I'm trying to say. So for Dubai, it's good because the leader and ruler focuses a lot on building the country to be number one. But for AED to be global, it needs to push AED to be number one. So I believe what the ruler is doing now is getting everything within, because he runs the country like a company, right? Get the company, everything settled, and then after that go global. So I believe this is the direction for AED, at least for stablecoins.
Ral, do you agree?
Yeah, so I think, look, I'll tackle the retail perspective. So there needs to be some value use case for a retail customer in order to use an AED-backed stablecoin. So I think, let's see, given that it's a fairly recent phenomenon, sort of exactly what these stablecoins are tied to. So for example, if you have an AED stablecoin that allows you to buy, I don't know, EMAR property, for example, then that could be a use case as to which then why a retail customer would then want to use that, actually keep that AED stablecoin. So I think, we need to see more how the market develops and what exactly sort of value added is tied to the stablecoins. And I think, look, you touched upon CBDCs earlier as well. So I guess, UAE central bank here is a key proponent for them. Look, the launch of digital dirham is underway. It's also the fact that UAE is also pushing down the retail CBDC path. I think it'll be interesting to see how that also evolves as well with adoption. So, I mean, CBDCs are all based around programmable money. So, for example, banks, say, Kokila, you walk in and you want to buy a Tesla, so the bank gives you 500,000 dirhams, you could actually spend it on a petrol car. But now with programmable money, it means that you can only use it on those specific things that you signed up for. So I guess, it'll be interesting to see as well how the market adopts CBDCs when they come into play.
For us, I mean, I think the most requests that we get from a settlement perspective is more USDT, USDC than, for example, the dirham stablecoin. So I think they're a little bit more mainstream right now than anything else. But from our perspective, we're still at a wait and see. So.
I'm sure as in this space, you would be getting a lot of requests for settlements. And because PTSR from CBOA makes it mandatory that the last mile settlement is either in AED stablecoin or in AED itself. So we will see this whole market shift where, interestingly, what you all have pointed out, we're going to have more than 4 to 5 AED backed stablecoins. We're going to have the digital dirham, the retail CBDC. So we in UAE, interestingly, will have our domestic products, so many, and we have to see what the retail is actually looking for. How do we incentivize them? And again, brings me back to the topic which I like to talk more about is on that. If I don't give incentive to my retail users, what is the use for them? Because we are such a digitally advanced country that they don't see the real use case for using a digital currency here. But when we move outside UAE and we look at the other Asian countries, some of the African countries where banking is a challenge, this is a solution for them. I think from that mindset, every regulator is looking into this space. And interoperability, cross-border remains the crux of it. Tough competition stablecoins are going to have from some of the CBDCs if digital dirhams goes the way that how central banks envisage. So I'm aware that we've got just 3 minutes left. Audience might have questions. But just before that, 2026, what do you think could be the main highlight for our audience here in either virtual assets or stablecoins? One line each, please.
I think it will be a year that will see significantly higher adoption of stablecoins. And the game changer could be if there is yield-bearing stablecoin, that could be a big game changer. We don't know what the regulation will be. Eventually, it will happen when one doesn't know. But that would be a game changer for stablecoins.
For me, I see banking orchestration as the future. And why? Because our banking orchestration will create like account abstraction where everyone is adopted into crypto without knowing it's crypto. So on-off ramp will be seamless to normal users.
Yeah, frictionless, seamless
Frictionless
adoption, not
adoption.
knowing what you're
Exactly.
using. Yes.
Yeah, I think to add on to those points is as you see the increase in adoption of stablecoin, particularly on the settlement layer, you should also see some cost efficiencies passed on to retail customers as well. And I think, adding on, stablecoin yield products could be the thing of 2026.
I think from our perspective, 2026 would be transformational for the foundation and the regulation of stablecoins, especially in the country here, in order to prepare for like full I believe, launches and a bigger transformation in 2027.
I think 2026 year is going to be the year of regulations in stablecoins globally, we'll see. So just to add here, I have just co-authored a book on stablecoins and the future of financial regulation, where we've gone into depth about talking about what is a stablecoin, what are the use cases we see, what are the technical standards, what are the risks involved, and most important, how do we do cross-border operations and settlements, and what do we mean when the governments need to work together, because we've created what is a digital programmable money, which is borderless. The technology doesn't see the border, but there are borders we all have. Like if we can talk about within UAE itself, we have AED stablecoins, many of those, and we have dollar-backed stablecoins competing in the same small market. Imagine at the global trend what's happening. So that's an attempt I have made in putting together in this book. And one more thing, just to highlight that how important regulations are in space. I am one of the experts that has drafted the model law on stable coins for all the Commonwealth nations. And yesterday was a remarkable day for us that in Fiji, we had the Commonwealth Secretariat Assembly, and this got adopted by all 56 member nations. This just shows that what is the demand these nations where banking may not be the strongest point is actually having for these new age transformations that build up their financial infrastructure. So with that, I would like to thank the organizers here for having us all here. Happy to be participating in this with you all. Thank you.
Thank you.